Hello everyone. Today we'll be analyzing the stock Ipca Laboratories Ltd. In this video, we'll be doing the fundamental analysis of the stock, and then we'll move to the technical analysis, and then we'll calculate the intrinsic value of the stock, which is one of the core concepts of value investing. And we will lay a foundation stone and we'll present our analysis as to what stance we can assume in the stock. So let us start with the fundamental analysis of the stock, which lays the foundation. The company Ipca Lab was founded in 1949 and it is a fully integrated Indian pharma company, and it is engaged in manufacturing, research and development of pharma products. It is known for its dominance in the anti-malarial business. Hydroxychloroquine, a drug which is used in the cure of malaria, is in high demands recently due to its positivity in the treatment of COVID-19. And many countries, including US and many European countries, have expressed their interest in buying hydroxychloroquine, and India has supplied a huge volume of this drug to the other countries. Ipca Lab, it has the world's largest production facility of hydroxychloroquine, and due to its effective backward API integration, it is very less dependent on China for the supply of raw material, which makes the manufacturing process even more easier and a bit cheaper as well. And if we look into the export formulations of the growth in the export formulations, it comprised 28% of last year's revenue. And in a statement to Bloomberg, the joint MD of Ipca Lab, Mr. Ajit Kumar Jain, he mentioned that they are ramping up productions of the chloroquine products after US has lifted ban on 2 chloroquine products. And the revival in the European Union also serves an added demand to this drug. And based on these factors, we expect that the CAGR of international formulations growth is expected to grow at a rate of 19.8% in the next 4 years. The domestic formulations comprised roughly 44% of last year's revenue, and the company has also witnessed an incremental growth in other therapies apart from these anti-malarial solutions like pain reduction and other therapies as well. And based on these, we have a projection that we expect that the CAGR of this domestic Indian growth formulation is expected to grow at a rate of 12.9% in the next 4 years. The profit after tax CAGR is expected to grow at a big rate of 31% because the company is showing industry-beating domestic growth formulations, and there is a healthy international demand signs of majorly the anti-malarial hydroxychloroquine drug. So the major growth highlights of this stock is that there is industry-beating growth in the domestic formulations last year. US has removed ban on 2 essential chloroquine products, and US is one of the largest exporter based on the demand. The company is leader in malarial therapies, and it has continued its exploration into other spaces as well. So this was all from fundamental analysis. Let's move to the technical analysis and see the correct entry and exit points. Let us look at the weekly chart. In the weekly chart, we can clearly see that it is forming a rising channel formation with higher highs and higher lows. And around this level, the break has been. We have witnessed the break, and we have seen that this channel formation has witnessed a breakout. And we can also see that 21 and 50 EMA are placed. The stock prices is placed at 21 and 51 EMA. In fact, it is taking support from the 21 EMA, which is rising. So we can see that yes, this is a positive sign. Even the MACD is showing consolidation, good consolidation. The volume charts are moving like the candlestick charts, which is a good sign. The RSI, weekly RSI is placed at around 62, which is another good sign. So what does this weekly chart majorly indicate is that the price breakout formation is forming a rising channel formation, and it has seen a breakout. We have seen an immediate support placed around 1440 to 1445, which can be acted as a stop loss plus minus 10-20 points. And the weekly RSI is placed at 68, and the volume chart are mimicking the weekly candle chart, which is another good sign, and which this supports our positive bias. If we look at the daily chart, we can see again consolidation in this range, heavy consolidation in this range. The stock price is placed firmly above the 21 and 50 EMA, and the volumes chart is exactly mimicking the daily chart, and the MACD is also showing consolidation, and RSI is placed at 53. So this is another good sign, and we are witnessing good healthy positive bias on this chart, on the stock. So what does this daily chart indicate majorly? The stock is witnessing a consolidation and it is trading above the 21 and 50 EMA. The consolidation in the candle is mimicking the volumes chart, which is a very good sign. The MACD and RSI indicators are also showing consolidation, which actually supports our positive bias. So this was all from the technical analysis point of view, and we are very firm that the stock is going to rise in the coming future. Now let us move to the intrinsic value calculation, which is one of the core concepts of value investing, and many billionaire investors, including Warren Buffett, who introduced this idea, and he has made billions based on this concept. So let us put down some parameters. We have taken the earning per share of trailing 12 months, that is last year earning per share of 49, which is the data. You can see this data on Money Control, Yahoo Finance, or anywhere. Now secondly, we have taken the growth rate, projected growth rate over the next 5 years of around 26.08%. This is again based on the analysis data of Yahoo Finance and others. We have taken an average. And let us assume that we want a minimum 15% rate of return on the stock. Because if the rate of return is lesser than this, then you can better invest in mutual funds or fixed return in instruments. We want a minimum 15% rate of return. And we will be applying a big fat margin of safety, around 50% margin of safety, because margin of safety is actually required. This is a heavy margin of safety, and this is what protects our funds from getting lost in the market. We have taken an average PE ratio of 52.16 based on the last 5 years. We have taken the highest of last 5 years and the lowest, and we have just simply taken an average of that. And what we'll do is, in this method, we will be forecasting the prices for the next 10 years, and then we will be applying our depreciation, that is 15% rate of return, which we are expecting, and we will be reducing year by year, and we will see what the current value of the stock should be based on the next 10 year for projections. So when we feed on these values into our calculator, which we have studied from various places, we find that the current actual value of this stock is 2924. The stock should be valued at 2924, while the current market price is just 1554.75, which is roughly around 90% lesser. Around half. It is roughly around half. And this we have taken out this formula from Phil Town's book, The Rule Number 1, which was New York Times bestseller, and we have used that formula to calculate this intrinsic value. If you want further more information on how to calculate the intrinsic value of a stock, you can leave that in the comments below, and as soon as we'll find more likes and more demand for this calculation method, we'll post a video on how to calculate the intrinsic value of a stock, so you can go ahead with that. So what conclusion we draw from this? So it is a very good buy in a staggered manner. We have to buy in a staggered manner at around the levels 1550 to 1560, or even if it goes down, we have to buy on dips, and we can see an upside of 20 to 25% in the next 6 months. The target can be around 1875, and we have to place a strict stop loss of 1450 to 1460, which was the resistance level which we saw earlier. So please do like this video and let us know any queries or anything in the comment section below. Do share this video with your friends, and you can contact us via any of our channels. You can contact us on our Instagram, Facebook, Twitter, or on our website. You can also comment below, and we'll be reaching out to you one by one. So a small disclaimer as well, we are not a SEBI registered or any registered investment advisor yet. However, we are in the process, so we advise you to consult your financial advisors before investing. Good luck, happy investing, and bye bye.